Hey guys, welcome to this week's podcast episode. And I've got a really fantastic guest for you today, Michael Vandi. And today's conversation is all about AI and loan origination, which is going to be really interesting in the fintech space. He is a CEO of Addy AI based out of San Francisco. We're in the same city. And I'm really happy to welcome Michael to the show. It's going to be a great conversation. Welcome, Michael.
Thank you so much. Happy to be here.
Yeah, I'm always scouring the globe for, just the innovators and disruptors. And so you're one of those. And so talk about your journey, what Addy AI Addy is, how the audience can learn more about you.
Thank you. So I am the CEO of Addy AI. We are what's known as an AI loan origination software. So what we do is we help banks and non-bank lenders train AI assistants to automate the loan origination process. So helping loan officers do things like due diligence with AI, automatically reviewing applications with AI, and then moving it from phase all the way from like application to closing the loans. And then our software is being deployed at one of the largest, you know, non-bank lenders in the U.S. And then they process a lot of mortgage loans a year.
Yeah, and it's quite interesting because I've been doing a lot of I do a lot of research and thinking, and I just this whole idea where this whole like loan origination process for housing and these credit scores are really they're really nonsense. And this whole process is just so cumbersome, and it's just, I mean, only if you are rich or if there's like you can have access to this. So talk about, this idea of where Addy AI came about, and we'll delve into more of the specifics.
Yeah, so there are a couple of things. Sometimes it could be less cumbersome if you look at like what kind of data they're looking at, and sometimes it could be very cumbersome. So if you're looking at, let's say, bare credit scores, if your credit score is not over 50, it's like an automatic rejection. So it's easy to write software for that. If you need to have like a certain amount of assets in your bank account, so when you submit your bank statement, it's like an automatic rejection. Now, where the cumbersome process comes into play is when they have to do due diligence into the entity's background, whether it's like a company that needs the property or it's like an individual that needs the property. The loan officers have to spend days and weeks, and it's like a lot of back and forth. And anyone who's gone through the mortgage lending process, it's like a really long and stressful process. So giving the loan officers like the tools to make the process faster is what we try to do at Addy AI.
Yeah, it's quite interesting because I hear these stories. Like for example, the was it was the Apple CEO, and he was able to apply for credit very easily, and then his wife, she applied for the same thing and she got rejected.
Yeah.
And things like I read on Twitter, there's one guy, he paid down his balances and his credit score went down, and he's like, WTF, it's like it's like, well, it's supposed to go up, but
Yeah.
just all these crazy ridiculous stories. But so talk about one thing is talking about how AI is changing the mortgage lending industry. How is it getting rid of these inefficiencies? How is it making it more fair and equitable? I'm curious.
Yeah. So when you look at like any sort of industry, right? In order for it to be efficient, at any stage of the process, there has to be a clear path to the next stage. And think of things like production lines at car companies. After the doors have been fixed, it then goes to the electricals and then things like that. Now, it's a little bit different in the mortgage industry because sometimes every single case is different. And so people have to find the time to like figure out, oh, hey, well, what's the policy in this particular state? Like, is there some sort of like state policy that we're meeting and things like that? So one of the first things that AI is changing is doing all these automated policy checks. So as these scenarios come in, it says, oh, first of all, the location is in Maine. We don't lend in Maine, so that's like an automatic disqualification. So a loan officer doesn't have to spend like 20 minutes going through the documentation to see that, oh, hey, we don't even do this. And then after that, It's like all the little steps in the process. Well, what are some of the information that we need from this borrower or like client or broker? And then you would want to have some automation in terms of like helping the loan officer do that back and forth communication until all the information is present. And then when the information is present, then the loan officer can actually be like a human reviewer. That's how we mitigate risks. So we don't automatically say, oh, hey, once you have all the information, like, hey, you're good to go. We try to think of it as like a co-pilot that you give to loan officers to help them make decisions better and faster. And it obviously it's like a great experience for both the clients and the lenders as well.
Yeah. So I love this. It's basically using data and algorithms to kind of cut out all the excess BS. And then so the other question is and I love this idea of you have like a human at the final stage kind of saying, okay, all this has been now we need to just kind of do a check, things that really need to be checked. So we'll talk about the other question I have is so you know, basically, we talked about is changing the mortgage lending industry, and then how are you looking at the how AI is changing the way home loans are reviewed? Like, what is like, the typical process is, you basically get pre-approved and you submit all your forms and all your income statements, and it gets reviewed. How is AI changing that?
Yes. Well, one of the ways that AI is changing it is the process is becoming a lot faster. So I can speak of it from the perspective of the broker or the client, and then I'll speak on the perspective of the lender. And so, in the perspective of the client, you get to receive correspondences really, really fast. Then you don't have to wait for a loan officer to do their research before they get back to you. So you get to have like a great experience. Another thing that's changing is you get to understand your policies in a personalized manner. So when you get approved and then you finally receive that policy, it's like dozens and dozens of pages and you don't know the fine prints and things like that. And then you can actually chat with a personalized AI assistant and say, well, what am I getting into? And you can chat with it in natural language and it tells you exactly that, oh, hey, this is like a 30-year mortgage. You have to do XYZ, and then if you don't pay XYZ by this time. So it explains to you like a human. It's not like huge jargons that you don't have to understand. And so that leads to like a great experience for the broker and the client as well. And there's so many different kinds of mortgage loans, like, and then the ones that you could qualify for, let's say like VA construction loans, each one of them have different policies that not everyone can understand in their head, right? So having this assistant that can tell you about it is really great. And then on the side of the lender, we all know people are understaffed. And so what happens is these loan officers are overwhelmed with the number of applications that they have to review. And so these lenders have the possibility to equip the loan officers with the tools that they need to scale it much faster. And the bottleneck in most of these systems, the bottleneck is people working slower and productivity gains and productivity increases. And that's because there are more people, more entities applying for mortgage loans that there are loan officers to review these loans. So it's like just supercharging them with all the tools that they need to make decisions faster. And one thing I would like to say is that the way I see AI changing in financial services is that because financial services is like very number driven, it has a quantitative measure. And so
Yeah.
with ChatGPT, when it hallucinates, you don't know whether it's right or wrong because you need to have like some expert fact check it, right? With financial services, there's actual number, there's a source of truth, which is a number that you can actually check if it's right or wrong. So that's one of the ways I think AI is changing financial services and mortgages.
Yeah. The other question I have, kind of follow-up question, is this idea, because I was a lot of my friends and colleagues, were entrepreneurs, and, we've transitioned from this idea of W-2 to more just like building businesses. And what we were just we're out shooting a shit with over beers, and we're just talking as like, how does the algorithm treat entrepreneurs and people creating businesses over W-2? Because in the past, you had the some of your W-2s, and now if you're like consultant or independent contractor, you submit 1099s. How is this and it seems like for business owners that make more than W-2, the system disfavors them over W-2. So how is AI changing that?
Yeah. So the good thing about AI is you can train it, and well, that's also the bad thing about AI because when you train it with flawed data, then you get, garbage in, garbage out, right? And so we try to train with a diverse amount of data. And so there's this thing called overfitting in AI, which is when the model becomes trained so much with like one particular data set that it becomes skewed to that data set. So if you train it with a bunch of data from like let's say contractors who are not on W-2, they have companies, and then they get approved a lot, then the tool learns that hey, these are actually the people that we should be lending to. But if you try to not skew the data, then it becomes fair and equitable. And so we have done a whole lot of work in trying to make sure that our training data is not skewed towards a particular group of people.
Yeah, so basically the training. Another question I have for you is because you mentioned this idea of more applications to loan officers. And so what is this? Basically we've seen it with we've seen it with Uber and Lyft, basically, and we've seen it with Netflix, just basically, and now we're seeing it with also Tesla, just the obliteration of just the need for humans. So what is this going to do to the human side of the equation in the mortgage origination process?
Wow, that's a tough question, and I'm
Yeah.
going to give you my honest opinion of like where the technology is right now.
Yeah.
It where it is right now, it cannot replace every single thing that a human does, and you actually would not want it to at this moment. You would not want to give. So the majority of Americans have their net worth in their homes, and you would not want to give that power to a machine deciding the asset class of the majority of Americans, right?
Yeah.
And how we try to think of these things is as a co-pilot for these loan officers. So one thing that we've seen repeatedly is, well, when certain models come out, they are as smart as, let's say, a sixth grader. And then after a couple of months, they are as smart as someone who's in 12th grade. And now we're getting to a point where they are as smart as someone who's, as a new grad intern coming in to help you. And so if you try to think of it as a new intern who you can just give particular tasks to. We have intern at work and we give them all the Scott work to do. Imagine being like a residency, so we try to consider it as that. So like the loan officer right now is like the lead surgeon, and then the AI is the resident right now. And over time, 10, 15 years from now, that would change. And when that changes, we have to think about, how we approach it as a society. And that's not a question for someone like me who's an innovator to think about. Well, I should think about it, but that's not a question that I've been making policies to like affect.
Yeah, yeah, I love that. And I actually think, I actually think the obliteration of industries is actually good because it forces people to get off their butts and, kind of do things, as opposed to, because like I go around and I see all these like government workers and, they just sit there and basically do nothing. And it's like, so it's good to have like this disruption, for
Yeah.
better or for worse. But, and the other question I have is, so you're in San Francisco, one of the best places for VC and base, startups, kind of the home of all the Mag 7. Um, Talk about just kind of your journey, why you started it, kind of the pitfalls and challenges, and then end it with how people can find you and follow you, etc.
Yeah. I have an unconventional journey to Silicon Valley and tech. I was born and raised in Sierra Leone, Freetown, Sierra Leone. And from a very early age, I've always loved building things. I learned how to code when I was 14. My mom was a teacher, so she introduced me to all these technologies. I remember when I was 7 years old, I think I got my first laptop, and I might have been the only kid in the neighborhood, might have been the only city with a laptop at 7 years old in West Africa. I learned how to code, got a desire to build things, and then I applied for college in the United States, and then I, came to the US, studied computer science, and then I was involved in like a bunch of extracurriculars, went on to work at AWS on AI, and then I did my master's in software engineering and AI at Carnegie Mellon. And then while I was in school, actually, I started tinkering with AI. And I've lived through two different realities where in Sierra Leone, there's not a whole lot of mortgage tech. In fact, there's like no mortgage tech at all. And then I come to the US and it's the difference is like night and day. And
Mhm.
when I studied I think, well, this could be improved even more. Like the processes are so mundane and slow. They have a bunch of roadblocks that could be improved even more. So I started tinkering with creating this tool that could help loan officers with email correspondences. And then I kid you not, a bank reached out and was like, hey, this could be really useful. And I didn't even intend it to be a company at the time. I was like, well, let's chat. And then we started chatting. I built a small team of my friends from Carnegie Mellon, and it became extremely useful to them. And once I graduated, I was going to go back to Seattle to go to AWS, and I was like, "Well, I don't need to. I could just stay in San Francisco and move to San Francisco and work on this company." And that's what I did, and we've been able to do really well ever since. So it never became as like I wanted to build a company. I was just like tinkering with what could be improved, and then a customer that needed it reached out, and I learned about the industry.
Yeah. One question I have just personally is because I see a lot of innovation in London and Dubai, Singapore, of course, China, and eventually India. Do you think San Francisco is still the best place to build for tech startups, or is it kind of shifting away? Now we have Zoom and remote, and a lot of the investments are going outside of the United States. Just curious about your thoughts.
100% San Francisco is the best place to build a company. And I don't say that to build a tech company, not only a tech company, but a software company.
Mhm.
I don't say that because well, obviously I am biased, right? But as an entrepreneur, the odds are stacked so much against you that the most minimal optimization that you can do is like where you live and the location. And in San Francisco, there's like a lot of resources and networking opportunities around. So 99% of businesses fail. And then the list that you could do is move to a place where you have more chances of success. Now, Dubai and other places do have chances of success, absolutely. But in San Francisco, it's like unparalleled. And,
Mm.
it's coming back. I'm glad you're in San Francisco. So if you want to chat sometime, we have to hang out.
Yeah, yeah, definitely. Like I said, I'm in San Francisco for the summer just to have more exposed to more stable climate. And but yeah, it was really fascinating. And how can people contact you, find out more about Addy AI, follow your socials, and check out the work that you're doing?
Thank you. Our website is addy.so. That's addy.so. They can go on there and then contact me. I'm also on LinkedIn, Michael Vandi. Reach out to me on LinkedIn. I'm very active on there, and I'll be happy to chat.
Yeah. And I really enjoyed this conversation, and I always love talking with tech entrepreneurs, very forward thinking, and just discussing these issues. And for all the audience, be sure to give Michael's socials a like and follow. Check out Addy AI, see the work, and thanks so much for coming on.
Thank you so much.